What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm actually, I guess was a delay for my clinical rotation, so I'm going back in a few hours. So I'm going to squeeze in this video for you guys. This is a high yield dividend stock. This is a really good real estate investment trust. I'm buying more like crazy and reinvesting the dividends. This is part 2 of the REIT series. So I really am excited to reveal part 2 of the series and go in depth with a lot of these dividend stocks. This one has solid dividend growth and revenue, and I have a certain percentage on my M1 Finance dividend portfolio that I'm buying just about every week. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. Smash that like button. Let's check this readout right now. And that REIT is Gaming and Leisure Properties Incorporated. It has the symbol of GLPI. Dividend yield of 5.31%, a PE ratio of 22.03. It's actually beating the S&P right now. Average volume 1.17 million. Remember, PE ratio, that's not the most important thing when it comes to real estate investment trusts. The market cap is 13.69 billion US dollars. The range is 41.81 to 53.91. Day range is 52.96 to 53.34. And its previous close was 53.17. So let's check these guys out and why I love these guys. So going on their website, their portfolio consists of 59 geographically diversified gaming and related facilities and amenities well positioned across the nation. So Gaming and Leisure Properties is the nation's first real estate investment trust focused on acquiring real property assets and lease to gaming operators. Their portfolio has 59 premier gaming assets and is geographically diversified across 18 states. Their tenants include Penn Entertainment, Caesars Entertainment, Boyd Gaming Corporation, Casino Queen, Bally's, and Cordish Companies. Through innovation and proven management team that pioneer the gaming of the REIT space, we have a leveraged wealth of industry knowledge to deliver consistent year-over-year total shareholder return while enhancing the strength and stability of our diversified portfolio of premier gaming assets. We expect to grow our portfolio by pursuing opportunities to acquire additional gaming facilities to lease to gaming operators through our triple net lease arrangements. We anticipate diversifying our portfolio over time by acquiring properties outside the gaming industry. The expertise and industry knowledge of our management team will allow us to secure additional avenues for growth beyond the gaming industry and allow us to pursue other acquisitions that may prove complementary to our existing assets. So let's go over their portfolio real quick. So geographically, this is how these guys are. This is not too bad. Here's one, Zia Park Casino. Las Vegas is pretty heavy right now. Tropicana Laughlin, right here, M Resort. And I'm trying to squeeze in that other one. There's actually one in Idaho, the Jackpot Properties. Denver, Bally's Casino, Blackhawk. Right here, like I said, Zia Park Casino. Louisiana has a lot one. Lake Charles. Right here, Baton Rouge. There's one, Hollywood Casino, Gulf Coast. And here's Tropicana, Evansville. In Ohio, there's one Hollywood Casino in Columbus. Hollywood Gaming and Dayton Raceway. Here in Northeast Ohio, Hollywood Gaming and Mahoning Valley Racecourse. Another one, the Meadows Racetrack and Casino. So there's a lot of people that usually go to these. Hollywood Casino in Perryville. Here's one in Maine. Hollywood Casino in Bangor. So they're expanding and they have a philosophy that they're going to expand and get bigger. So that's one thing that very much attracts me to these guys. So I'm going to go over their revenue and their dividend history. So the revenue's been pretty strong. This is in millions US dollars. 2015, 575, 2016, 828, 2017, 971, 2018, 1055, 2019, 1,153, 2020, 1,153. Blame the pandemic. And then in 2021, the revenue did go up to 1,216. So from 2015 to 2021, there was a huge jump in revenue, which is attractive. Let's go over a few more things. So Yahoo Finance linked Benzinga with this most recent article on January 13th, 2023. So GLPI hit a new 52-week high this week and a new all-time high as well. While the most real estate investment trusts are struggling as they come off to last year's lows, it is unusual and noteworthy to see this one achieve success for shareholders. The gaming resort-oriented REIT benefits increase interest from the casino sector, with stocks like Las Vegas Sands and Wynn Resorts Ltd. also making new highs recently. Company owns 59 gaming facilities, numerous states. We already went over that. But right here, so this they're located in Pennsylvania. The gaming and leisure properties is trading with a price to earnings ratio of 22 and just over 3 times the book value. Funds from operations are in the last 12 months are down by 1%, and overall in the past 5 years, FFO growth is 7.8%. The long-term debt exceeds shareholder equity with a 1.71 ratio. Not too concerned. The average daily volume of the NASDAQ stock market is 1.33 million shares. So right here, another thing is Raymond James analysts on January 9th downgraded the REIT from a strong buy to outperform and reduce their price target from 57 to 55. I do believe it's a little bit overvalued, so I agree. Truist analyst on January 11th upgraded GLPI from a hold to a buy with its price targeted increase from 54 to 60. So there's a few things I just wanted to go over there. FF growth is 7.8%, which is attractive. These guys did do pretty well despite the pandemic. So that's one thing that attracts me. Now let's go to their dividend history. So 2014, they were 52 cents. 2015, they jumped to 55 cents. 2016 to 56 cents, to 60 cents. 2017, 62 cents, to 63 cents. 2018, 68 cents. 2019, 70 cents. And then you see the pandemic. Ouch. You know, right there it says 12 cents. But guess what? There's a huge rebound to 60 cents. And then their dividends growing back up. So it was at 70 cents in 2020, and now they're at 71 cents in 2022. So 2021, they went to 67 cents, a little bit of a bite in 2022, and then they jumped to 69 cents. Okay. So you got a little special dividend there at 24 cents, excuse me. Then you got 69 cents, and then they're at 71 cents. So the dividend growth of 5 years is 1.42%. You can blame the pandemic. Number of dividend increases in the last 5 years is 6, and the payout ratio is 80%. If you bought one share, you made 282 with a 5.30% dividend yield. I'm going to hold on to these guys for a long time. I believe that this is a buy and hold stock. In the long term, again, this is not financial advice for entertainment purposes, only disclaimer in the description. So I like these guys. This is why I did a review on them for my REIT series. Let me know what you think of GLPI. And I'm going to start doing with a lot of my shorts at the start of next month announcing dividend hikes. I'm going to compare dividend growth with certain stocks with shorts. I think that's really, interesting. So I'm going to do that for you guys. So I'm going to try to maybe get a video every day. I was very lucky to squeeze this one in. I mean, this is why I tell you guys to hit that notification bell after you subscribe. So I can't guarantee I'm going to make a video tomorrow, but I'm going to try to get one in for Saturday. You guys take care and have a good one.